Check one, check.
Listen up, folks. In today's financial landscape, navigating the waters of investment can feel like steering a ship through a storm. The waves of uncertainty are high and the winds of change are relentless. Interest rates are stuck in the basement and it seems like they're not planning to move up anytime soon. This has left many investors scratching their heads, wondering where to turn next. Your hard-earned savings are practically begging for a raise. The returns on traditional savings accounts and bonds are so low that they barely keep up with inflation. It's a frustrating situation for anyone trying to grow their wealth. Traditional income sources like savings accounts and bonds are singing a sad, low-yield tune. It's like a broken record that keeps playing the same disappointing song over and over again. But fear not, because there's a beacon of hope in this sea of financial uncertainty: dividend-paying investments. These investments can be your guiding light, helping you navigate through the storm. These beauties offer a consistent stream of income, helping you stay afloat and even thrive in a low-interest rate environment. Imagine receiving regular payments just for holding on to your investments. It's like having a financial life raft. Dividends are like getting paid to own a piece of a company. It's a beautiful thing. When you invest in dividend-paying stocks, you're essentially becoming a part owner of the company. And as a part owner, you get to share in the company's profits. As companies grow and prosper, they share their profits with you, the shareholder. This means that your income can grow over time as the companies you invest in become more successful. It's a win-win situation. This steady stream of income can provide a much-needed boost to your portfolio, especially when other income sources are lagging behind. It's like having a reliable friend who always has your back, no matter what the market conditions are. And let's not forget about the long-term benefits. Dividend-paying stocks can be a crucial part of your retirement planning. They offer the potential for both income and growth, making them a versatile addition to any investment strategy. So, the next time you find yourself frustrated with low interest rates and meager returns, remember the power of dividends. They can provide the financial stability and growth you need to achieve your investment goals. Embrace the siren song of dividends and let them guide you to a brighter financial future. With the right strategy, you can turn the tide in your favor and sail smoothly towards your financial dreams. Remember the good old days when you could park your money in a savings account and watch it grow at a respectable rate? Yeah, me neither. Those days are long gone, folks. We're living in a low interest rate environment, and it's squeezing the life out of traditional savings options. Savings accounts, once a haven for safe and steady growth, are now barely keeping up with inflation. Bonds, often touted as a low-risk investment, are also feeling the heat, offering paltry returns that barely make a dent in your financial goals. It's a tough reality, but burying your head in the sand won't make it go away. The days of passive investing are over. In the past, it was possible to simply invest in a broad market index and watch your wealth grow steadily over time. However, the financial landscape has changed dramatically. Market volatility, economic uncertainties, and geopolitical tensions have made it increasingly difficult to rely solely on passive strategies. Investors now face a more complex and challenging environment where traditional methods may no longer suffice. You can't just sit back and expect your money to magically multiply in this environment. The days of set-it-and-forget-it investing are behind us. Now, more than ever, it is crucial to take an active role in managing your investments. This means staying informed about market trends, understanding the factors that influence asset prices, and being prepared to make adjustments to your portfolio as needed. The stakes are higher, and the margin for error is smaller. You need to be proactive, seeking out investments that generate income and help you stay ahead of the curve. This involves identifying opportunities that offer not just potential for capital appreciation, but also a steady stream of income. By focusing on income-generating assets, you can create a more resilient portfolio that can weather market downturns and provide a reliable source of cash flow. This proactive approach requires diligence, research, and a willingness to adapt to changing conditions. This is where dividend-focused ETFs come in, offering a powerful solution for investors seeking to take control of their financial future. Dividend ETFs are designed to track indices composed of dividend-paying stocks, providing investors with exposure to companies that have a history of paying and increasing dividends. These ETFs can be an effective way to achieve both income and growth, as they combine the benefits of diversification with the potential for regular income distributions. Dividend ETFs are like diversified baskets of dividend-paying stocks, allowing you to spread your risk across multiple companies and sectors. This diversification helps to mitigate the impact of any single company's poor performance on your overall portfolio. By investing in a broad range of dividend-paying stocks, you can benefit from the stability and income potential of established companies while also participating in the growth prospects of emerging markets and sectors. They offer a convenient and cost-effective way to access a stream of passive income, putting you firmly in the driver's seat of your financial journey. With dividend ETFs, you can enjoy the benefits of regular income distributions without the need to constantly monitor and manage individual stock holdings. This allows you to focus on your long-term financial goals, knowing that your investments are working for you. By taking a proactive approach to income generation, you can build a more secure and prosperous financial future. Dividend ETFs come in all shapes and sizes, catering to a wide range of investment goals and risk tolerances. Some ETFs focus on high-yield dividends, while others prioritize dividend growth. There are even ETFs that specialize in specific sectors like real estate or utilities, known for their consistent dividend payouts. This buffet of options allows you to pick and choose the ETFs that align with your investment strategy and risk appetite. Whether you're seeking immediate income or long-term growth, there's a dividend ETF out there waiting to supercharge your portfolio. Section 5. The allure of dividend stocks, growth and income combined. Dividend stocks are like the superheroes of the investment world, offering the best of both worlds, growth potential and consistent income. Unlike bonds, which offer fixed income payments, dividends have the potential to grow over time as companies increase their profits. This combination of growth and income makes dividend stocks a compelling option for investors seeking to build long-term wealth. By reinvesting your dividends, you can accelerate your portfolio growth through the power of compounding, turning those small payouts into a significant nest egg over time. Section 6. Vanguard Dividend Appreciation ETF, a steady ship in choppy waters. Now let's talk about a specific ETF that deserves a standing ovation. The Vanguard Dividend Appreciation ETF, or VOIM. This bad boy is like the reliable workhorse of the dividend ETF world, consistently delivering solid returns and a steady stream of income. If you're looking for a set-it-and-forget-it investment, VOIM is your guy. VOIM focuses on companies with a long history of increasing their dividends, meaning you're not just getting a payout, you're getting a raise. It's like having your own personal dividend growth machine working tirelessly to boost your portfolio's income stream. Section 7. Under the hood, VOIM's winning formula. What makes VOIM so special? It all boils down to its meticulous selection process and rock-bottom expense ratio. VOIM tracks the performance of the NASDAQ US Dividend Achievers Select Index, which includes companies with a proven track record of increasing dividends for at least 10 consecutive years. This rigorous screening process ensures that VOIM only invests in companies with strong fundamentals and a commitment to rewarding shareholders. And the best part? VOIM charges a minuscule expense ratio, meaning more of your money stays in your pocket where it belongs. Section 8. Charting your course to financial freedom with VOIM. In this section, we will explore how VOIM can be your guiding star in the complex world of investments. Whether you're a seasoned investor or just starting out, understanding the potential of VOIM can set you on a path to financial independence. In a world of financial uncertainty, VOIM stands tall as a beacon of stability and income potential. The Vanguard High Dividend Yield ETF, or VOIM, is designed to provide investors with a high level of dividend income, while also offering the potential for capital appreciation. This makes it an attractive option for those looking to build a reliable income stream. By investing in VOIM, you're not just buying an ETF, you're buying peace of mind. The fund focuses on high-quality, dividend-paying companies, which tend to be more stable and less volatile than the broader market. This means that even during turbulent times, your investment is more likely to remain steady, providing you with a consistent income. You're investing in a proven strategy that can help you weather market storms and achieve your financial goals. VOIM's diversified portfolio includes companies from various sectors, such as consumer goods, healthcare, and financials, which helps to spread risk and enhance potential returns. This diversification is key to maintaining stability and growth in your investment portfolio. So, what are you waiting for? The sooner you start investing in VOIM, the sooner you can begin to reap the benefits of its dividend income and growth potential. Time is a crucial factor in investing, and the longer you stay invested, the more you can take advantage of compounding returns. Jump on board the VYM train and let the power of dividends propel you towards a brighter financial future. Imagine the peace of mind that comes with knowing you have a steady stream of income regardless of market conditions. This can provide you with the financial freedom to pursue your dreams and live life on your own terms. Remember, investing is a marathon, not a sprint. And with VIM by your side, you'll be well equipped to cross the finish line with a smile on your face and a fatter wallet in your pocket. The journey to financial freedom is a long one, but with the right tools and strategies, you can achieve your goals and enjoy the rewards of your hard work and smart investing.